Okay, folks, welcome to Market Wrap for Tuesday, the 8th of March. Okay, so today was a very strange day. I had expected to follow through the downside this morning, but certain things occurred this morning that caused me to become a little bit less bearish and skeptical that we would get a continuation breakdown in the market, at least for today. So that's why we booked profits on our short of PayPal. We're out of PayPal completely. We booked profits on TQQQ. We were short of this using naked call options. We were also short of the triple Qs using put options. So while the markets have been down on the week, we've had a very, very strong week, especially when you take into consideration our gold position, meaning our gold mining position, not gold position, our gold mining position, our silver position, and our silver mining position. So hats off to everyone that has been a part of this. Okay, so why or what influenced me this morning? Well, initially, I got up at around 4:15 in the morning, and I go to the news, and I always check the headlines on Zero Hedge, check the futures, check Europe, check Asia, and of course the pre-markets here. And I do scroll Twitter. Don't laugh at me. I do scroll Twitter. Yes, it's a cesspool, but when it comes down to financial influencers, there are a bunch on there that I like, and some I don't like because they use the media to manipulate their positions. But that's okay as long as you know what they're doing. You can use it to your advantage. So before I go to Bill Ackman, teaser alert there, Bill Ackman, in a moment, a spoiler alert, I should say, I saw a tweet out of Wall Street Silver about nickel. Nickel prices blew through the roof overnight, and it forced a major bank over in China to fail to meet a margin call. It's one of the four top banks in China. So they must have been short of nickel, and they had their faces ripped off. So I see this, and I already took a look at the futures and said something's not adding up here. You have one of the top four banks over in China that failed to meet a margin call. You have Russia on the verge of a bond default, yet equities aren't puking. Something's wrong. So I continued to scroll around, fishing out little nuggets of information. Then I happened upon a tweet from our good friend Bill Ackman, who I've been talking about of late because he speaks his book. And so the last time I spoke about Bill Ackman, he was commenting about how we should have no-fly zones over the Ukraine. We're in World War III, blah, 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 blah. Therefore, Bill was short. That's my conclusion. I don't care what he has to say. I just care what his angle is. Fast forward to this morning, he shares out this article. What is going on? This is out of the Jerusalem Post. What is going on in negotiations between Russia and the Ukraine? I'll spare you this. It's all pretty positive towards a resolution to the events that are going on over in the Ukraine. I hope it is, and I do hope it gets resolved for everybody involved, especially the people over in Ukraine, the citizens of Ukraine, some of whom are my friends and business partners. So, of course, I wish them well, and they are doing well. I'm in contact with them. So Bill shares out a bullish article. Therefore, Bill is bullish. Therefore, Bill is probably covered as shorts. Add to that, the futures were not responding to the expected. Biden to ban Russian oil supplies. Not Europe. They're good. They're gonna get sold Russian oil and gas, not us. So we continue here in the United States to chop off our own limbs. More on that in a moment, because we did put on trades to protect ourselves from us doing ourselves a lot of damage. Because if Ukraine is resolved tomorrow, if the Russians go home and go to the UN and apologize to the world for invading Ukraine, the damage to the United States credibility as the world's reserve currency, as a reliable business partner, as a global leader, has been damaged because we have been willing to weaponize our financial system. We seized the FX reserve of Russia. Our corporations and our government have canceled Russia. The problem is that unlike certain individuals that rely upon Facebook, Twitter, and whatnot, and they have limited competition, which is changing, well, the global choice is now emerging, and the choice is pure and simple. China. Our arch nemesis. We are doing our best to push customers their way. So in the end, Russia's just going to be all fine and dandy. They're just going to have new business partners. Us, we're going to pay the price for what we just did. Now, how else do I know, or what else I should say, leads me to believe that we're near a conclusion to the events over in the Ukraine? Well, you take a look at oil. Oil is very overbought. We opened up very, very high. We reversed at one point in time. We were red on the day. We flashed a doji star formation. That's a sign of indecision. That means that money is beginning to slow and actually beginning to exit oil. Home heating oil. This is unsustainable. RSI at 90, nearly 92. We're trading up and into the third standard deviation Bollinger Band. This is a fear trade that clearly is unsustainable. This is going to correct, and it's going to correct hard. When it does, I'm going to be filling up my tank because I think it's going to go a lot higher longer term. What else led me to believe that the Ukraine issue is near resolution? We spoke about this last night. The banks, European banks, they were very oversold. They popped today. Agriculture pulled in. Cal-Maine Foods, which we own, I mentioned this is going to correct last night, and certainly it did. Natural gas gapped down on the day. The MOVE index, this is the volatility index for bonds, pulled back today. The VIX, the fear index for equities, pulled back today. Now, this is not dead. We're still seeing a beautiful setup here on Stokes, but we may be good for one more burst up here, up into a 40 handle. I would imagine will probably be the top, and then we should begin to see the VIX pull back. Now, longer term, if the Ukrainian crisis ends tomorrow, does that mean inflation is done and we can go back to normal? No, inflation was here before Russia invaded the Ukraine, before there was even a conversation about the invasion of the Ukraine. And as you take a look at the tips today, there's no ambiguity here. Treasury inflation protected securities rallied today, closing at the highs of the day. So this is a measure of inflation fear. Now, what I didn't talk about yet was the dollar. The dollar in a monthly time frame still looks very, very strong. I don't think that we're going to close out March strong. And when you take a look at a daily chart, we closed down today. No great shock. We were extended. But I think that as this crisis comes to a head, and assuming that there are no other emerging crises on the horizon, whether caused by the Russians, or it wouldn't shock me if we caused the problem with our leadership, I think the dollar is going to correct. It's going to correct very, very hard. So for quite a while now, we've been talking about what we're going to do when the dollar crisis finally arises. And while it may not look like a dollar crisis now because of all the money that's been flowing into dollars of late, the damage that we've done to our credibility around the globe ain't coming back anytime soon. So the game plan has been build positions in commodities. We did that. Check that box. We're getting paid. Short equities. We did that. Check that box. We got paid. Now, what we began doing today was buying emerging markets. Today we opened up, I've been talking about this one for the past couple of weeks, IDX, the Indonesia Fund. Why do we like it? It's a natural resource play, a manufacturing play. It's the second largest growing economy behind China. We like it. Look at the chart here. We are in the pinnacle of or an apex, I should say, of a triangle formation. I think we're breaking out. Stokes, beautiful. Now, you may be saying, this doesn't look like a great rally here since 2020. Well, I wouldn't pay attention to the rally off of the COVID lows. What I would pay attention to is this multi-year consolidation going back to 2010. The last time we had a major bull run in the IDX was the beginning back here, March of 2009, post-financial crisis. From that point in time, it rallied around 400% within a year and a half. So as I always like to say, when you see these opportunities, these setups, the greater the consolidation or the longer the consolidation, the greater the validation of any breakout. Now, when the dollar does begin to correct, you're going to see money move out of the United States and into emerging markets. So we're going to be looking to add more here on a breakout above this upper band of resistance. This is an investment, folks. We could be in this one for several years. So if you missed out today, don't worry about it. Some of our positions, gold mining stocks, rallied, but again, more indication here that they've had a heck of a run and that we're probably going to pause because we're beginning to see a light at the end of the tunnel over in the Ukraine with negotiations. So there's a lot of fear built into commodities right now. And once we get a resolution, a ceasefire, you're going to see a lot of money come out of commodities. Will it go back in? Yep. But in the short term, we're going to correct. And it could be pretty rough. Nugget closed down lower today, if you could believe that. So to me, this is clear and defined topping action. In the short term, expect a correction. Silver, of which we're long, a beautiful day. We're up another 8.5% here, but we were higher. Topping tails. Sellers above. Sellers from back here, they're looking to get their money back. On any pullback, we'll be buyers. We'll add more. Our silver mining trade. We closed up on the day, but we closed well off the highs of the day on massive volume. What that tells me is that, 5-minute chart, is that we saw intraday selling on fairly significant volume, but ultimately we managed to rally and close positive on the day. So would I buy more here? No, I would not. Would I sell? No, I would not. I think longer term it's going a lot higher. Now, LABU has been trading fairly well relative to the S&P 500, and it closed up on the day. Now, remember, a few days ago, RSI broke out, and that caused me to sell naked puts, 16 strike on LABU, which we rolled out of into a new round of weekly options, 16 strike, expiring on Friday. But we also sold calls at the 16 strike, creating a strangle. So the shares sold off. So I decided, let's step in. We haven't broken down to new lower lows and begin to buy. So if we break down to new lower lows below 1255, we're going to have to lighten up. But if the markets rally tomorrow, I think that LABU will rally along with it. As for the S&P 500, this is a monthly chart. I think that we may get a rally fairly soon. The catalyst for that rally will be the resolution to the Russian crisis, but it's going to be short-lived. And on that counter trend rally, whether it be the S&P 500, the Qs, small caps, all of them, doesn't matter to me. We're going to be looking to reshort this market yet again. The only reason why I wouldn't short it, or the only thing that would prevent me from shorting it, is if the Federal Reserve steps in and they begin to blow up their balance sheet yet again, which is entirely possible. Now on the day, S&P 500 indicators still look pretty bad, but we may have a higher low here. So if we get a positive headline news tomorrow morning about a ceasefire, expect a rally here. Again, folks, it's going to be short-lived, but we know that counter trend rallies can be brutal. So that's why we closed out our short trade today. And with that, everybody have a great night, and I will talk to you tomorrow. Be well.